Deven Choksey is with us. Deven Choksey of DRChoksey Finserv. Deven, good to have you with us here. Thank you very much for your time. I mean, as we begin today's session, we got a bit of help from Wall Street after yesterday's pretty disappointing close. What's going on, Deven? It looks like in many sectors, momentum is kind of broken here, right? I mean, this sort of non-stop, just one-day break and then market starting to move up. That's kind of behind for some sectors. Are you noticing that as well, and what would you do?
Yes, Prashant. Good morning. Absolutely. Not very surprising, though. I think this particular momentum had to break, largely because of two reasons. On one side, you have already higher base effect now kicking in. As a result of which, I think the visibility for growth is probably, I think, not as strong as I think it was there last year. Obviously, I think the growth premium which was given by the players in the market, I think that is now coming down. And that's where I think you're seeing a sharp cut in the stock prices, individual stock prices. Many of the metal commodity companies, I think you've seen a sharp correction in the stock prices. You have also seen sharp correction in the stock prices of some of the mid-cap, small-cap companies where I think they have not lived up to the result either. So all these points, I think, are coming in together, and as a result of which correction is happening. We are prepared for it because I think we always had this particular understanding that I think moment the high base effect gets into the system, I think the growth rate tapers down, and as a result of which, I think the companies will not be able to command the significant premium that they've been commanding up till now. At the same time, I think there is zero chance for anybody to make a mistake in the working of the company. Moment I think you bring, I think, a little lower than the expected result, I think the market is ready to punish you. So these factors have already started playing its role. I think this correction of a sharper degree in some of the quality fundamental stocks, I think could be a good opportunity going forward for those investors, I think, who want to build their portfolio with a solid long-term fundamentals.
All right. Hi, Deven. Good morning. Since you briefly mentioned metal stocks, what about Vedanta? Mr. Anil Agarwal finally seems to be getting his house in order, and he's making the moves which are shareholder friendly. The problem for is that the global piece has gone a little bit, into a bit of a tizzy. Demand is softer, prices have come off as well. But Vedanta will get close to around 5,000 crores at least if this 2.5% stake sale that you're looking at by the OFS route in Hindustan Zinc goes through. Your view on it, because 5,000 crores is a lot of money, which can be used for debt reduction, paying out dividend, or even fund their capex.
Yes, absolutely, Nigel. Good morning. Well, I believe that I think in particular the Vedanta story looks, I think, more firm than ever before. They have been trying to correct their balance sheets, and I think they have been succeeding with one after another move. I think this one also appears to be, I think, a very successful move. I think should it get completely executed, probably I think this would create cash, as you rightly observed. But more importantly, on the other side, I think each of their metal assets are earning good amount of money. If you look at zinc business, I think they've been showing distinctly high amount of growth. The prices have improved. So yes, I do agree that internationally the prices may have softened in some of the commodities, but in the white metals in particular, I think the zinc and the silver both, I think they are having significantly large amount of contribution to get into the balance sheet. So I would even relatively firm about Hindustan Zinc's prospects going forward. Vedanta, of course, I think once the restructuring gets completed, one will have to look at afresh. But as of now, I think both of them are relatively steady, and the stock prices should also perform better going forward.
Okay, all right. Sounding positive on Vedanta. Let's talk about Hero MotoCorp then, Deven. What do you make of the numbers? The stock has done fairly well in the recent past, but how would you view the stock from here on?
Yeah, maybe I think some softening of the margin in this particular quarter has been experienced for this company. And probably that creates a differentiation between the strategy of Bajaj versus Hero, wherein Bajaj is constantly trying to get into the premiumization product and constantly move into that particular space so that the margins are also protected and at the same time the better numbers get reflected on the bottom line. Whereas in case of Hero, I think the legacy portfolio does affect them as far as I think the margins are concerned. But if you look at, I think, one of kind of a situation on a quarterly basis, I would believe that I think the margins are likely to remain steady. This year, the cost pressure, particularly for most of the OEMs, I think from the ancillary side, is going to be lower comparatively because of the better behavior of the metal commodity prices. Should that be the situation, I would like to think that in subsequent quarters, the margins would remain protected. And at the same time, around 6-7% kind of a market growth in the business is not ruled out two-wheeler segment. So should that continue, in my viewpoint, I think this particular business will remain a steady performer, with an exception to Bajaj, which is basically moving with the right kind of models, I think, which they're bringing. They may probably, I think, show relatively stronger performance compared to other peers in the market.